Hello dear traders, welcome back to InstaTV. You're watching daily financial news with me, Anna Kasatkina. Crude futures resumed a rally on Monday while the supply glut poses a dire threat to the global oil market. According to weekly reports, the oil market is still out of balance and crude inventories are at a multi-decade high. The situation is festering amid the latest report on U.S. crude inventories and the oil rig count. According to the report from the U.S. Energy Department, total U.S. crude stocks gained 1.4 million barrels last week. The figure came as an unpleasant surprise to the market, as it is contrary to analysts' forecast for a nearly identical drawdown. Oilfield services firm Baker Hughes reported that the number of active U.S. oil rigs rose by 7 last week to 381. Nevertheless, oil prices are rebounding today, having touched an intraday high above $42 a barrel. Benchmark Brent crude settled up at about $44.80 a barrel. The oil is now at the consolidation stage. U.S. West Texas Intermediate rose 1.3% to settle at $42.32 a barrel. The demand for oil futures is on the rise as several oil exporters from OPEC are pushing for fresh talks on setting new limits for oil production. OPEC countries are making attempts to strike a freeze deal for half a year. The talks failed in April as some OPEC members are striving to increase their market shares. Meanwhile, the oil rally underpins commodity currency against the strong US dollar. On Friday, like other commodity currencies, the Russian ruble fell sharply to multi-week lows amid advancing US dollar. However, today the ruble rose to 64.80 versus its counterpart. Currency strategists warn that the ruble's growth is likely to be short-lived. Most experts share the viewpoint that oil is set for a bear market in the short term. OPEC has announced that the informal talks are scheduled for late September in Algeria. And this was Daily Financial News on InstaTV. Thank you and goodbye.